lot of our conversations at the moment are around, do we need to raise additional funding to support this short-term position, or what we hope to be a short-term position, or do we need to assess the working capital facilities that they've got access to make sure that they've got the cash there as they need it to sort of weather the storm.
This is a very proud industry, and we're all very proud to be associated with it, and I've been associated with it for 40 years now. And it is changing, it is evolving, and it's not a sign of failure to have to go and do things differently. It's because life has changed around you.
Don't bury your head in the sand. We're seeing a lot of people that we talk to, or maybe don't talk to, that do bury their head in the sand. As soon as the finance topic comes up, I don't want to talk about that, or I've got that covered.
If you could give one piece of advice to transport operators as they are listening to this podcast about managing finance in the current climate, what would it be? Hello and welcome to the next edition of Roadway the podcast. This afternoon I'm joined by Callum and Joel from PMD Finance, and we're going to talk about finance. Not particularly an exciting subject, but when you actually get into this podcast, you'll see the relevance of it from our growth, from resilience, from day-to-day trading, and why it's so important to the ever-changing logistics and haulage industry in this country. So good afternoon, both.
Afternoon, Mitch.
Maybe just 2 minutes just to introduce yourself, a little bit about your background, a little bit about PMD. So, Callum, you'd like to go first?
Sure. So I'm Callum Bull, one of the directors at PMD Business Finance. My background started many years ago in corporate banking, and then moved into the independent sector about 6 years ago. PMD Business Finance, we're a independent commercial finance brokerage, and proud to partner with the RHA in terms of that business finance offering. What that means is, we support businesses and business owners with their day-to-day financing requirements. So whether that is financing a truck as a haulage operator, or a working capital facility, or maybe funding for growth, we cover all those angles.
Thanks for that. Joel?
Yeah, I am Joel Moffat. I joined finance probably about 5 years ago. My background is previously being working at the lenders, and I joined PMD probably about a year ago now. PMD was actually one of my accounts that I look after, so I'd be going in and seeing them and talking to the guys about ongoing deals that we had. And I knew myself that when I wanted to make the jump over from working at a lender to a broker, it was sort of one place that I wanted to go really. And yeah, jumped over and helping lead RHA Business Finance. So talking to a lot of members sort of direct and hearing a lot of their struggles, and talking to them all things finance and sort of seeing which way we can help them. And yeah, it's going well.
Okay, so we'll dive straight into it there. So you mentioned two words that I just want to unpack a little bit. So one, you mentioned broker, one you mentioned lender. What's the difference between the two, just for the purpose?
Yeah, sure, absolutely. So a broker or an intermediary works with a panel of lenders typically to go and source funding for that particular need or requirement there. They're taking the instruction from the client and going out into the market to try and find that piece of funding. A lender only has sort of one credit policy, and we'll take instructions from various brokers, but may also deal with businesses direct as well.
Okay, so for the purpose of the listeners, and there'll be a number that don't know what a great service you give to the industry, what do you do exactly, and what type of business? Bearing in mind this industry is made up of, if you look at a typical profile, 85% less than 15 trucks, which probably turns over less than a couple of £1 million. I would suggest you maybe more attuned to that than I am. So it'd be described as a micro business if you look at the definition from government. Then we've got this, I think the start says 500 businesses have over 1,000 trucks.
Yeah.
And then somewhere in the middle, you've got the rest of it. So it's a really small industry that's skewed by some large global operators that's very integrated.
Yeah.
So where do you sit in terms of who do you support? Is it all three of those bands I've described, or is it one in particular? Or where does PMD sit in that?
All three, Richard, but when I look back at PMD's data, and in particular where we've serviced the sector, it's very much in that small to medium aspect of the market. So we've supported a lot of operators acquiring their first truck, or when they first start out, and it's fantastic to be part of that journey. But also a lot of operators who sit between 15 and 20. So well placed to service all those areas of the market. But I couldn't tell you the exact stat. I'd probably say 70 to 80% of what we do is at that smaller end, and medium.
Well, that's that's a good stat to have, because 70% of that is the industry. So you're very relevant, is the point I'm making to the actual challenges that we face today, which is my next question. So obviously, as this podcast been recording, I think the price at the pump is £2.05 on the Rotherham service station on the M1 per litre of diesel. So we're seeing rising costs. We're seeing the margins getting smaller and smaller. We're seeing challenges around resource. We're seeing probably challenges around access to finance. And we're seeing decarbonisation on the agenda, which we will come back to. So what's the biggest financial pressure you are currently seeing from the people that are coming to you? And, how can you support and help them with that?
Well, topic of the moment, as you referred to there, Richard, is rising fuel costs, right? So, if you're an operator, you might not have the ability to pass that on to your end customer. So you probably sat there thinking, how do I manage this rising wave of increased costs? So a lot of our conversations at the moment are around, do we need to raise additional funding to support this short-term position, or what we hope to be a short-term position? Or do we need to assess the working capital facilities that they've got access to make sure that they've got the cash there as they need it to sort of weather the storm? So that's been the bulk of mine and Joel's conversations over the last few weeks. Prior to that, we like to be involved with sort of growth conversations and expansion, but that very recently, that's been the hot topic.
Yeah.
I mean, I think it's interesting. We get involved in the Barclays Confidence Index every year, and it's something we support that every year. I was talking to Barclays last week, actually, and certainly the feedback we're getting from the industry, and you will probably get it as live as we do, is around they're not really looking to the future at this moment in time. It's all about the here and now.
Yeah.
And long term would be 3 to 6 months, I would suggest. It is literally weeks and weeks. And as I mentioned earlier on, I've had a number of phone calls daily, actually, about they can't do next week, because of the way, the market's currently placed. There's also a conversation about what's the difference between a lifestyle business and a business, which, this industry has got traditionally some lifestyle businesses in there.
Yeah.
And there's nothing wrong with that. It serves you well. But at certain times you can be exposed as well, when it comes down to, challenges on your margins, such as the ones that we're seeing today.
It's really hard to be strategic when you're worried about cash and you're almost firefighting. And to have that lens to growth when you've got your eye on other things is difficult.
And that's it, really. I mean, in terms of, and it's how do you move from lifestyle to a business, in an environment where it's typically less than 5% margin, where when you list, one of our operators members listed out all his costs, not just a truck, you put everything else, and it was like about 3 pages long, because obviously, and we're similar as a trade association, we employ 115 people, so when minimum wage goes up or the NI goes up, I've got a big cost coming. We have circa 60 cars, because we're very much engaged in the industry. So that fuel cost that's going up, I don't have the ability to pass it on to anybody, because obviously we're a member-led organisation and our membership fees are fixed for that period of time.
Yeah.
So it's sort of challenges. So for operators looking to access finance, what are the key things that you as a lender would look for or a broker look for today?
It depends on what they're sourcing finance for, right? But as a general rule of thumb is that, there's been thought and consideration to the ask. So, why am I looking for this facility? How's it going to benefit me and the business? But secondary to that, can I present my business in the best possible light? So can I present up-to-date financial information? Can I present a positive view on the growth that I'm expecting or might not be expecting in the next 12 to 24 months? And I think if you can present your business and show that you've considered all these things, you're showing to an intermediary that he can then or she can then go out and put their best foot forward for them to secure that financing.
Do you see a difference? And I guess the answer, well, I'm not going to preempt it. So we've got the SMEs, we've got the middle size, and we've got the large organisations. Is there a difference between what larger operators are coming to see you about rather than SMEs, or is it more or less the same sort of thing in a different scale?
Yeah, I'd agree. I think you tend to find that it's a huge generalisation, this, Richard, but well, as the business gets a little bit larger, their access to financial information becomes a little bit more considered. So they've looked at the financials in terms of an up-to-date position. They've probably got a forecast, so they've anticipated some of those challenges. At the smaller end, they're probably not quite there yet because, as we referenced earlier, they're busy and
it's a lifestyle.
It's a lifestyle, and they're doing other things. So that's a big generalization, but that's the key difference.
It's normally definitely a different ask from what a larger company is asking you to do or take a look at. Is maybe move a couple of different agreements around and make it maybe a bit cheaper in the long term. Whereas your smaller businesses, at the minute, just asking for help, rather than saying, can you move this and this along and sort of rearrange some of my debts. It's changing to either can help us stay afloat and help us with cash. And definitely, I think the old traditional views are cash is king, and if you can't afford it, then you don't buy it. But at the minute, everyone is looking at cash is king and alternative finance. But that's really more in the smaller SMEs, isn't it?
Yeah, go there.
Well, I think, just when I use, I don't know, when we use the expression lifestyle business, we're not implying that the people that run them are not astute, not commercially, capable, not entrepreneurial. Far from it. It's just, to me, the difference between the two, just clear definition, is that it's finding that chance to break the cycle, to be more strategic, as you just described, to have that moment in time, because they're either fixing the truck, driving the truck, doing the accounts for the truck, they're involved in the truck. That's the lifestyle business for that definition. It's how do they actually get the chance to step back and the long way and grow. And it sounds like what you guys do is can support them on that journey to help break that chain, to become more business focused and enabled, to allow them to actually look at things and actually run their businesses in a slightly different way.
Absolutely, and it's lifting your head up almost with access to that information, and not just speaking to people like ourselves, but other advisors along the way, and having that level of conversation, and almost, what am I doing this for? And thinking that next step on.
Yeah, that's an important point, is that because you'll be aware of the stats that certainly for the last 3 years, we've seen over 500 businesses go into administration. This year was, up to this point, predicted to start to see a steadying downturn. My sense is we might see that accelerated to a new level because of the current challenge that we've got. And you mentioned cash is king. But how can businesses use finance, to support the stability rather than just reacting to a problem? If there's a dish, does that make sense? So it's almost, we're all in this situation now. Even, the big global distributors and logistics companies will be feeling the pain in their own way, as much as the one or two, vehicle operator. It's just relevant in terms of the impact it has on their business. So how can, your typical 70% of the industry now, look at doing things slightly different, or reach out to you and say, can you help me with X, Y, and Z? Does that make sense?
Absolutely. And we talk a lot about benchmarking. So benchmarking at the moment is probably quite a reactive thing, because the benchmarking, but they're doing it subconsciously to react to a problem. But there's no reason why that shouldn't be an annual exercise, just from a health check perspective. So, when it comes to, the end of your financial year or the calendar year, speak to someone like PMD to understand, have I got the right working capital facility in place? Am I financing my fleet appropriately based on my current circumstances? And have I got access to the right facilities to fuel growth? And if you've got that in place, at least on an annual basis, then you're prepared should an unfortunate situation happen, i.e., your cash is constrained, or a positive scenario where, you can capitalize on growth opportunities, but you've covered both bases.
And again, that goes back to the point we've been talking about, it's breaking that cycle for a lifestyle, become a business, and you can enable and support that part of the journey by people getting in touch with you, basically, and just seeing what's involved in that. And, it's really, it's worth a call, if nothing else, is the message I would give to the industry.
Absolutely. And, our close affiliation with the RHA allows operators to do that on a completely complimentary basis, and just come and review their facilities and see if they're they're fit for purpose or otherwise.
And again, one of the things that we are seeing quite a lot in this industry, and you guys are probably involved in it actually. So I'm going to ask you a question that might seem a very obvious one. We're seeing quite a bit of consolidation, certainly in the medium to medium type businesses, and there is a perception that the SMEs are going out of business. That's not something we see, because there are some that are leaving. Quite a lot of that's voluntary because it's a difficult industry, and it's that generational pass on, and the generation that's coming in don't want to do this. There's a different way to earn a few quid. But those guys sat out there, just out there for the purpose podcast is the sales team in the RHA. We'll see, we get 900 new members a year who are less than 2 years old in the industry. So part of what we do is to help nurture and bring them through, and that's why the lifestyle part's quite important. But through consolidation, how can, finance and what you guys do, if I'm looking to go out, and if I was an operator looking to go out and acquire and grow, how can you support that process?
Sure. So I think we've got, looking at some stats of the day, which I think it's an aging demographic across the industry.
Yeah.
So that lends itself to, some retirement sales scenarios.
Yeah.
So, we've seen some operators look at that as an opportunity to, acquire a stable, long-standing business and bolster their existing operations. So, we support that in a structured financing capacity. So what that means in layman's terms is you want to go and buy another business or another operation. How do you fund that? Now, it's quite a rare scenario that someone's sat, they want to acquire a business for 100, 200, £1 million, whatever the number is, that they've got that cash sat there on the balance sheet to go and do what they need to do. So we will often go in and advise around funding that transaction. Now that might be 100% funding, that scenario. It might be partially funding, a cash contribution, with a bit of debt finance, with a bit of deferred consideration. There's various different scenarios, but we absolutely we fund those examples on quite a regular basis.
We've touched on it and we've sort of scaled on this. So could be anyone else, one of the big structural changes in the industry, and I always feel there's like 3 structural changes that are facing us. One's around skills, which is about the next generation and what does that look like going forward, their expectations. And there's a great example on this podcast. We are different generations. You will look for different things in life than I do, probably, and I'm not going to state you sound like that, and have different expectations in the workplace. And there's nothing wrong with that, because that's the great thing. If you look outside, over my shoulder, the RHA is made up of the 5 generations that are in the workplace, and I spend a lot of time talking to not my generation, so I understand what it is they want, and how we can engage and speak. Maybe it's not the same words, but a common language so we can achieve that, if that makes sense. So that's one, not skills. It's not a question on that one. Then we've got the actual infrastructure, which is another issue, the potholes, it's drop at the bits and congestion. We estimate there's £30 billion a year of inefficiency driven into the economy by congestion, and people not being able to get there on time, and trucks get double shift, and you're waiting for your products 2 days, not one, etc., etc. Yeah. But then the next one is the road to net zero. Okay, and we obviously are very supportive of it. I think we all are as individuals. We want a greener future. We want it to be more, better for our lungs. This industry is one of the biggest contributors, in this country to it not being like that. But, and this is the solution that are in front of us at this moment in time are significantly more expensive than diesel.
Yeah.
Even intermediary fuels, if you're going to use that, the HVO is, as we speak today, 10p more per litre. I think it's still the same, and some of the other alternatives have not been fully explored yet, whether it be hydrogen, some of the gases. And we certainly seem to be looking towards battery electric, which we support that move and believe that you should certainly have 1 or 2 alternative fuels to aim towards. We also believe that the final solution will be not just battery electric, it'll be 3 or 4 different fuels, because of the cost of the sectors that make up this industry, whether it be agri, quarry, the big stuff that you move around. There's just not an electric solution that we've been available. Anyway, putting that to one side. So as PMD, how you know, how do you support and how important do you look at structural changes like that? So I assume you have a plan. So you have almost like a decarbonisation policy. Well, that's its policy. Or just talk me through what that looks like from your perspective and how you can support this industry, because a truck's twice the price, I believe.
Yeah.
And you wouldn't go out and buy one, would you?
No, not unless you've got plenty of cash, Sarah. So, you know, working very closely with some of the manufacturers to try and get higher levels of RV support. From an asset financing perspective, that cost, it needs to be commercially viable. You know, in a truck, potentially in some circumstances, is double the price. You know, there needs to be some incentive there to move towards that change. So that can partly be supported with, you know, manufacturers and supporting residual values, which makes financing initiatives more attractive. So we're working quite closely there. Beyond generally just supporting the financing of that asset, infrastructure is, you know, a big thing, particularly for the operators. So it's not just at what point you're going to invest in the technology, it's I've got to invest in the infrastructure to support that.
Yeah.
So it's financing that investment as well. So, but both those, you know, supported a lot of operators in terms of driving towards that change, and, you know, long may it continue.
And are you sensing in the market from a lender's perspective that there's more of a support around the move to green technology? You know, or is it still viewed as one of the big challenges I think we face as an industry is a different way that I call financial business, because there's a lot of, you know, and I know myself from worked in the industry, I used to buy the truck, I'd depreciate it, I'd have a residual value, I'd sell it on.
Yep.
Happy days, off we go, we start again. You know, I sense that this is not that going forward, you know, from an electric truck perspective, purely around the price and because of the type of technology that's there, you know, and that's going back to the lifestyle business approach, you know, and it's a significant shift in this industry because obviously your working capital, X, Y, and Z, is a different way to run a business. I would suggest potentially in the next 5 to 10 years, we have to jointly, and it's not just me and you, take the industry on that journey. You know, I don't know if you've got any thoughts or comments on that statement I've just made rather than the question.
Absolutely, I think it's you know, we've seen some recent incentives from government, which is great, but you know, we probably need more of that to shift that, to shift or turn the dial.
It's uncertainty as well, isn't it? Yeah, people, because it's new. You've got the members that are saying, you know, we could take that incentive and we could make the durable, but what does that look like 5-10 years down the line? It's not a simple case of buying a new truck.
Yeah.
It's the infrastructure. It's what's going to happen to the trucks after, or the vans, and it's that side of the unknown as well, isn't it?
Yeah, I know you're absolutely bang on, bud. And yeah, I think we've got to work collectively. You know, the financing, you know, centrally as a, you know, a government, as a trade organisation, to support the change. But it's everyone working together in the same direction. Often there might be the financing, just speaking from our industry, is probably a little bit behind still, because I mentioned RV support that's centric to the manufacturer supported, for example. So that might be reflected on a manufacturer's own financing label, but is it reflected across the market? So you see that carry on just to make it pertinent to us. But as I say, it's all facets working harmoniously.
Yeah, and I think, you know, it's that learning. It's not try to rush your journey. You know, it's about evolution. This, not revolution. I think. Yeah, and I speak to a lot of you guys, to a lot of our members and non-members, people that work in the industry, in that changing business model. There is no second-hand market, you know, unless you see a second-hand market develop. There's a real nervousness certainly in the traditional element of this industry, which we have technology is the backbone of it, you know, the main part of it. I bought an electric car 2 years ago, and there is no, I didn't buy it actually, I leased it, but I always bought my cars up to that point for no reason. And it was obvious to me because I don't know what value is. But we have to face the fact that there's less than 1,200 electric vehicles on the road in this space, you know, and there's 550,000 to go at. So there's a lot of deals to be done somewhere.
Yeah.
One of the things, again, it's for a comment, and it's not for a comment that anything else is, you know, I was talking to somebody in government and a number of stakeholders recently, and personally, from a green electrification, if you're going to target something, target an area of the industry where it works. And then that gives investors confidence. It gives the truck managers confidence to keep producing the trucks. It gives the infrastructure people confidence to put the infrastructure in place. And it gives the industry confidence to see it works in that space. And that would be the pallet networks. Because it's either working on point to point or it's working on pallet networks, truck on delivery. Yeah. Because of the charging time, because of the infrastructure. Because most of the infrastructure is at depot.
Yeah.
That would work. And that would give the industry, and you made the point there, Joe, really important, give them some confidence and clarity and certainty. Because that's what drives business. So I don't know. I won't ask you to comment on that because it's more of an RHA position. That's certainly something that we're starting to push. If we're serious about this, let's focus on areas where it works. Let's support it. Let's get the lenders and the brokers involved and saying we can help them make this journey. And because it's too broad an industry to try and do a blunderbuss approach. You need to almost do it in a pinpoint mode, if that makes sense. So moving on to the most important question. How does PMD business support RHA members specifically?
I'll take it on, buddy.
Yeah. So to be fair, multiple ways. And I think obviously more recently with everything going on, it seems more one way than other. So that would probably be cash flow. A lot of members I talk to personally, or my colleagues talk to, is everyone struggling with, the price of fuel. Obviously, you don't want to keep banging on about it, but it is the main concern and sort of cash flow and what we're going to do with that. Whether it's, buying a new truck. So, they're not exactly what they used to be. You're looking at some trucks 200k plus. So people are saying, we used to buy that with cash. Now it's 200k, and then you've got the servicing on top of it. Servicing's high. What do we do with that? So you're seeing a lot of members definitely turn and say, okay, cash flow definitely is one of the main things that we need to relook at here. Our fleet is, slightly older. We're now maybe keeping them 7-8 years, which is longer than the 5 years we've been keeping them. So changing the fleet out, and all that's cash. So when, they're paying more for the fuel, struggling to pay fuel card bills, and we need to buy new trucks and service them as well, it all goes down to the same route of cash flow. But again, it's all very generalized. You've got people asking to, consolidate and move stuff over. But personally, when I'm talking to these members, that's what they're asking for. And I'm just seeing the same thing sort of, on repeat really. But I mean, what do you think?
Yeah, you're reviewing fleet options and funding strategies for supporting new investments, ultimately. And the only two other things I'd add on to that is optimizing working capital. So that might be a working capital injection. It might be just enhancing their existing working capital facility. So that might be an overdraft. It might be an asset-based lending facility. It might be an invoice discounting line. Whatever that is, we can put that in place for them, or review what they've got to enhance it. And then finally, it's around funding expansion and growth. So that might be acquiring another business. It might be just growing into a new area, purchasing a new depot, buying their current site that they're renting. That they're all different forms of growth and expansion and development, but we can play a part in each one of them.
Absolutely.
It's a fantastically interesting job you guys have got going around doing all this. It's getting involved in that process. It's
stressful.
Well, it's no 2 days are the same, which is fantastic. And whilst dealing with some of the sort of more negative challenges that we spoke about today, bring the sort of stress, it's usually rewarding as well, supporting people to get through those challenges.
If I was of your generation, I'd be asking you for a job, Callum. So last couple of questions. What advice would you give to an RHA member or an industry member, because this is not an exclusively RHA member podcast, who may be considering financing in the next 12 to 24 months? I think I know the answer, but I'll let you answer that.
That's right, mate. Yeah, fine. I think, again, talking to members, it's probably a case of just have a look, because a lot of them are thinking, no, we know our business, we know what's going to happen, and we're very content with the way we're running. And it's very sort of headstrong, this is what we're doing. Again, I talk to a lot of members and say, okay, listen, I understand that you don't usually touch finance and everything's purchased cash, etc. But just give us a go. Like Callum touched on before, the benchmarking service. We can just take a look. If you're looking at buying a couple of new trucks, let's just have a look, see what it looks like on paper for you guys in front. So you can turn and say, okay, it's going to cost us this amount a month. Right, okay, that's maybe a bit more manageable in terms of the cash. I guess it's even a sense of, if they need, cash raising and getting that into the business, we can just take a look at the business and see what have they got in assets that they own outright. Well, have you thought about, just financing your existing stuff and just getting that? I guess it's a relief of pressure, just to say, okay, you've got that sort of behind you, and you've got that nice wad of cash there that you didn't think you had access to.
Yeah, no, I think that's, so it's really give you a ring before saying no.
Yeah, exactly.
That's as simple as that. And it's one of the key things. This is a very proud industry, and we're all very proud to be associated with it. And I've been associated with it for 40 years now. And it is changing, it is evolving, and it's not a sign of failure to have to go and do things differently. It's because life has changed around you.
Yeah.
I think you have to be open to that. So would you like to comment on that, Callum? He's done well, a good answer.
It was a good answer. Just remind me of the question.
So just really, if you're considering, as an RHA member, considering financing in the next 12 to 24 months, what advice would you give?
We touched on it earlier, but I think be prepared to present up-to-date financial information. So if you don't produce management accounts, look at preparing that information before going asking someone else or a bank or a finance person to lend you some money. We linked back earlier, try and present your business in the best possible way, and present it, present the positives and the strengths, and that should give you a better outcome.
Well, I got one final question before I conclude and close. So if you could give one, I think you've done this, so we'll just clearly summarize this. If you could give one piece of advice to transport operators as they are listening to this podcast about managing finance in the current climate, well, what would it be? Go on, Callum, you were first.
Ooh.
You give me the question.
I think the reason why I'm going between two answers there, Richard, is if you've got a number of calls and dialogue we've fielded recently is where you've got a number of operators with quite high debt service costs. Mm-hmm. So I look at those and engage a professional, such as PMD, to review those, and can you consolidate and reduce those debt service costs? Because when everything's going quite well, you can probably weather those increased costs alongside everything else. When things become a little bit tighter, that becomes a real challenge to manage, and unfortunately that's when things can go the other way into sort of insolvency positions, because that's the one thing I see is that the tips that sort of edge is high debt service costs. So I'd encourage operators to have a look at that, make sure it's a position that they're comfortable with. If it's not, is there anything you can do about it? And go through that review and benchmarking exercise with your existing advisors, existing lenders, or indeed speak to PMD.
Cool. So I think the key message there, I'm not going to paraphrase you, but I probably will, is to, and I'll put it into my language, is to look for the interest-free credit card and bring it all down and move your only debt across, and then speak to somebody that can help you, that knows the detail and can support
and how to navigate it.
And how to navigate, which is the key thing. The word, finance is, to a lot of people, is one dear. It's a bit like tax return, it's one dear. It's one of those, but once you get into it, actually speak to the people that know and they can help. Same question for you, Joel. I'll just remind you what it is. Yeah. If you could give one piece of advice to transport operators about managing their finances in this current climate, what would it be?
Probably don't bury your head in the sand. You're seeing a lot of people that we talk to, or, maybe don't talk to, that do bury their head in the sand. As soon as the finance topic comes up, I don't want to talk about that, or, I've got that covered. And they sort of, I guess, try and skate around the fact of this big, finance question, and sort of, what they're going to do this year, what they're going to do next year after that. So definitely have a chat earlier, and there's definitely no shame in it. It's just having, a second pair of eyes take a look at it and maybe present you with a solution that you didn't think was actually available, or, even a thing. So yeah, it's definitely probably worth having just a conversation.
I think so. As we close this podcast, which I think has been very informative, and I must thank Callum and Joel for coming along. I think there's some key messages. It's a bit like when we did the one around well-being. It's typically people don't like talking about certain things. Finance is one of them. But as we go forward in this changing world, it's important that you seek help, you seek advice. The relationship we've got with PMD is a growing one as the RHA, and we don't make fortunes out of this at all. It's about enabling people like yourselves to speak to people like PMD in order to continue their business and develop and grow their business going forward. So thank you very much, Cal. Thank you very much, Joel. And speak to you on the next podcast. Thank you.